The micros have been a huge success in the industry overall. The micros have definitely been popular with our clients. We now do more micros on a daily basis than minis in terms of the S&P 500. And I would say the S&P 500 for retail at least. I'd be shocked if anybody told me it was not their number one traded futures product, because it's just a natural extension of what people are trading anyways. Particularly what we've seen the last couple of weeks when you have 100-point moves every day for a while. It's allowed people to participate in a different way, not to be shaken out, if you will, quite as often. And so I think that from that point of view and from the confidence in the markets, it's been an absolutely great place for people to start. Anything that you allow people to participate where they don't have to risk as much money so that they can get comfortable with the underlying product. And what you start to see is people move up the chain as they get comfortable to go from micros to trading the minis, so that it doesn't take as many and they're more comfortable with the movements.
How is the retail trader evolving?
It's really interesting what's happened with retail, because they've changed even over the last few years from, the crypto where a lot more people got involved, but I think a lot of them got involved in a much more speculative way, to now where people are just becoming more and more educated. They're starting to understand the products a lot more than they ever did. We built our company really on education and making sure that people understood the risk. And I think what's really started to happen is, you even look at zero DTEs, which have had such an incredible amount of growth. Again, when they first started, there was a lot more speculative play. There's still some speculation, which is fine. But what you're seeing are things like calendar spreads being done between an option expiring today and an option expiring in 10 days. These kind of things never really existed. They never existed because those options didn't exist. But what's happening is the evolution of the knowledge of retail traders is helping them to put on shorter term trades and use these products in a much different way than I think people thought they would. So it's really encouraging for me to see. I don't know that I'd say they're becoming professionals, but I think what's going on with platforms like ours and some of our competitors is we're evening things out in a way that didn't even exist before, and throw into that social media and the fact that information is now even across the board. I think that's one of the biggest things, is you take this tremendous amount of information that people can get immediately. You combine it with the fact that the platforms are absolutely amazing at laying out probabilities, et cetera, because that's all options actually are. And now you have somebody who can truly compete in a much different way. It's not on speed, nor should it be, but it is on, okay, I can adjust my positions, my risk tolerances in a way that I was never able to before. For us, it's okay, how does a client interact at the market more efficiently? Well, it's one thing when you're doing that on a computer screen. It's another thing when you're doing that on a phone screen. And one of the challenges we constantly have is, how do we make this mobile interaction similar as we can to a platform interaction? It's, clients expect you to be able to do that. And so for our programmers, for, our product team, it's something we think about every day and we really spend a lot of time with, is, does this interaction make sense on a small screen as compared to what people may see on a big screen? And you know it through, your kids, etc. People in their late 20s, early 30s, they want to come in for mobile first. Firms like us have had to continue to evolve over the last few years in order to continue to, attract a different type of client than somebody who's necessarily my age, who is more used to the software download computer.
Are you using AI?
We use AI in a few different ways. First thing is, our tech team is using some of it for QA, so that as they are writing the technology, they can instantly check a lot of it with AI. Now, it's not fully but we're starting along that route. It's really starting to show nice success early. So saving time and hopefully saving errors. Then, of course, you use it more and more on your interactions with your clients. So if a client calls into our trade desk, they may have a question about opening their account. Well, the trade desk is there to help them as they're making trades, etc. So not that we don't want to ever answer questions, but if we can save them time and basically money, we can save ourselves time in terms of having AI help them take care of that question in a much faster way. I think the other great generational gap, anecdotally, our clients over the age of 45 tend to prefer to interact with a human being. Our clients under the age of 45 tend to want to interact with whatever is fastest, which in this case is going to be often AI or by an email or whatever it may be. So again, talking about evolving to the needs and wants of your customers, that's 100% that. You know, you think back 10 years ago, if you tried to do something like that, people would be up in arms. Now the tide is completely shifted, where if they have to talk to someone, they're not happy.
What are your thoughts about India?
We've had some conversations over there. A few things about it. As you said, the regulatory hurdle there it's a bit of a lift, so you're not going over there overnight. So if you're going to go there, it's going to take a commitment of time and money and manpower, if you will. The other thing about it is if you look at their contracts, they were very, very small. There was not a lot of money in terms of the premium, et cetera, in the individual contracts. So when you see this volume, I think if you normalize it to what the average contracts are in the U.S., the story is still a good one, but it's not that amazing one that maybe caught people's attention in a couple of headlines. All about business is always about managing priorities, right? We have some other priorities we think we have to manage a little better in the U.S., including rolling out 24-hour equity trading, new interaction for our futures trading, et cetera, where we think we're better off spending time in the shorter term getting right, and then we can continue to look at other places.
What are you doing new in futures?
You think about what's happened in S&P futures, S&P futures options, et cetera, what a tremendous success it's been there, and retail share of that overnight trading continues to grow. I think you're going to see the same thing here. It will be U.S.-based clients, many of whom, for whatever reason, don't want to get futures approvals, and so maybe they want to trade the ETFs or whatever it may be overnight, or the Apples, the Metas, whatever it may be. And also, as you hit it right on the head, I think we in the U.S. It's definitely the best market in the world in terms of stability, in terms of regulation, et cetera. But we can't be arrogant to think that everything has to trade on our time zone. Many people are sleeping on our time zones. And so this allows people to compete in our markets in a way that I think is really exciting.
When does volatility become too much?
One of the things that's made me nervous, which hasn't happened, thank God, I was nervous that after we saw, I believe we had 5 days in a row of 100-point S&P 500 moves up and down. I was afraid people would just throw up their hands and say, I'm done. I don't know what to do. It looked like there was going to be a limited amount of that. The big rally we had where we rallied, 10 days in a row, it was so interesting how quickly people came back. And the other thing that happens in those circumstances, which I've seen many times in my career from a retail perspective, is when we go down like that, you see things like spiders, ETFs, S&P futures options become a bigger portion of what people trade because they're afraid to trade the individual names, so they trade more of the index base, SPX, whatever it may be. Then as we start to rally again, they spread out among a bunch of different names again. So I was really happy to see that after about that third day of rallying, we started to see a big dispersion. Again, that to me is the greatest measure of confidence, when people don't feel they have to be as index based because they're nervous to put their money on one individual stock.